Welcome to Global Money Talk, brought to you by Sanpro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me this morning is Tai Wong, independent proprietary trader. Tai, happy Monday, happy December to you.
Oh, it's great to be back, and unbelievable. It's December, and it is really chilly outside today.
Yeah,
I wore a hat for the first time.
Oh, you did?
I don't have anything covering my head.
And here at the New York Stock Exchange, we have Christmas tree lights adorning all the booths, and outside there is the Christmas tree lights, so the holiday season is definitely upon us.
And today is Cyber Monday, where I think most people are probably sitting at their offices, shopping right now. And I think I'll have to take a look at, after the show and see what's there. I'll have to say I took a sneak peek at Costco, and they have a 98-inch TV.
That is quite a massive screen.
That's like life-changing. I don't know if the missus will be really happy if I got a 98-inch TV. But is there anything on your list that you might be looking for, Cyber Monday?
So there were a few items in terms of electronics that I've been holding out for. So there's a potential I might check out the prices later on today, but we all know that when it comes to shopping, the traditional Black Friday where you wake up early and line up outside big box retailers, that's not happening as much anymore, is it?
I don't think, I don't know, I haven't done it. In fact, the last time I did it was probably 15 years ago, or thereabouts, or maybe even a little bit more. And, talk about a business that has gone by the wayside. I got one of those little GPS units. I think it was a Garmin thing or something,
yes.
and the cell phone killed that business real fast, right? I remember absolutely freezing. It must have been 0 degrees, and after that, I never did it again. Now you just sit online. But as you mentioned, the shopping. I was really stunned. I took a look at the stats on the shopping, and apparently it went very, very well. Black Friday, Adobe said it was $11 billion, up 10% from the previous year. And here's the surprise, I didn't realize that. So it was almost $11 billion on Black Friday, but they said consumers spent $33.5 billion on Thursday, on Thanksgiving. I had no idea people were doing so much shopping after the turkey. I guess it's an early meal. If you're not arguing about politics, let's go shop. So yeah, I don't think people were lining up outside anymore.
Yeah, Tai, you and I, we've been talking about how this year's holiday shopping season has been shortened because Thanksgiving fell on a later date this year, on the 28th. So fewer shopping days between Christmas Eve and Thanksgiving. So as a result of that, I've been receiving a lot of Black Friday emails even 2 weeks before the actual Black Friday shopping day.
Yeah, maybe we'll find something today. I mean, that 98-inch TV, I do say I have an 80-inch TV right now, so I can see the football players. But 98 inches, it's got to be an extra 40% of screen. But I don't think the missus will really will go for that. But there might be something out there.
Well, when we talk about spending, we know that U.S. consumer spending, it accounts for 2/3 of GDP. And last week, although I wasn't here to join you and talk about the latest economic data, there were a lot of data points that came in last week. And as we head into the rest of this week, we'll be paying attention to a lot of labor market data ahead of that big jobs number on Friday. So a lot to think about. And also last week we got that PCE figure as well. So a lot in terms of labor market data as well as inflation ahead of the December Fed meeting.
That's right. The first big jobs report this week is JOLTS, which is tomorrow. Which what are the job openings? That'll be interesting to see, and then we have ADP, and then as you say, it'll finish up with payrolls. Though I think, given the inflation data that came out last week, PCE, sort of on consensus. I think the core was 2.8, probably a little high for the Fed, but I don't think ultimately enough to really change what they're thinking about December. It really feels like, and I took a look just before the show, 65-35 in favor of a 25 basis point cut at the December meeting. I think it ends on December 19th, and it'll really sort of close out trading for the year, I think. I'm not sure there's a lot in the employment data that's going to make them not cut. My view is that they cut. I don't think there's anything that will make them not cut. Is there anything that would make them cut more? That seems unlikely as well. So it looks like it won't remain 65-35. I think it may drift towards more people looking for just a 25 basis point cut, and very few people are looking for a move in January. They think the Fed will wait until March to see what the new administration does, how the markets react. This but I guess we will wait until the week before and see if there's any leaks or any comments or any interesting articles from the Wall Street Journal. But it looks like the path of the markets might not be set, and we'll get into it a little bit later on the show. But I think the Fed may be more or less set for now.
And speaking of the markets, this would be a great time to take a look at where the major equity averages are trading. And last Friday, we saw the Dow and S&P 500 rise to new highs. And this morning, we're seeing mixed trading. The Dow Jones Industrial Average down by over 178 points below that 45,000 level that we hit last Friday. In terms of the NASDAQ, it is getting a boost as Intel is rising this morning. NASDAQ is up by 150 points, or nearly 0.8%, while the S&P 500 is trading nearly flat on the session. So in terms of the major U.S. stock averages, we are near or at record highs today. So first and foremost, I think we've been seeing a lot of trading action in terms of the FX market. Dollar yen broke below the 150 level last Friday. Right now we're seeing it nearly flat, but also the euro is under pressure this morning, down by as much as 1%. So tell us what's going on across the globe and what's affecting the FX markets this morning.
So as you mentioned, dollar yen dropped below 150 on Friday, and it's right at that level again this morning. First time in 6 weeks, and this seems more and more likely that the Japanese central bank will raise rates in December. I think that is largely baked in now, which is why dollar yen has come down from a high of probably 156 only a couple of weeks ago down to 150. It broke down a little bit beneath that upward trending channel we've been watching for a while, and looks like maybe trying to stay at near the bottom of that. So I think we've seen good yen strength, but that that rate hike might be priced in. In Europe, there's a little bit of a mess because the continent isn't doing well, and France particularly is doing rather poorly. The government itself might be in danger, not Macron because he's the president, and the president, France has a very unusual situation where they have a president and a prime minister, and the president isn't titular. The president is actually very, very powerful. One of the few countries where I think you could argue that the president of France is more powerful than the president of the United States. The president apparently picks the prime minister. So Prime Minister Michel Barnier, who many might remember was the really hard negotiator during Brexit, for which the British actually did not appreciate, but it was real tough, and he's the prime minister now, and he's trying to get through a budget that tries to reduce their deficit. I think their deficit is 6% of GDP, which is their target is 3, but 6 is too high. 4 or 5, he's trying to bring it down because their problem is their tax revenues have been sharply below what they were projecting. So he's trying to cut back on budget expenditures like indexing pensions to inflation. And since the election in France a few months ago, nobody has a majority. They've cobbled together a government, and Marine Le Pen, who is head of the right national rally, I believe it's called, is threatening not to support the government, in which case the government would fall, and they would have to try to cobble together another one while the budget is in disarray. So you have euro, which is really trading 104, 105, right at the bottom of a 2-year range. So collapse below that could really see us go towards par. I don't think this is an existential crisis like we saw about a dozen years ago when Greece and the rest of the so-called pigs, unfortunate acronym, were threatening to drop out of the EU, and it made great headlines last week when the 10-year Greek yield and the 10-year French yield actually were at the same around 3%. So Greece bonds yielding the same as France. I guess that what teaches you is you need to buy bonds when there's panic in the streets and when yields are super high, because Greece, 10-year bonds, 3%, right? U.S. 10-year bonds way higher than 3%. I mean, I think that says a lot more about the relative weakness of their economy versus ours, as well as our rather large expenditures. But it's a little shocking to say, Greece 10-year bonds yield substantially less than the U.S. 10-year bonds. So it's a tug of war in the dollar. The dollar overall is stronger, but it's yen is strong, but euro is very weak.
Yeah, the acronym PIGS is something that I haven't heard in a while.
I'm trying to remember what it was Portugal, Ireland. It was both. It was pigs with two eyes. Ireland,
Yep.
Italy, Greece,
And
Spain. That's
yes,
right. Oh
yeah,
my
yeah,
God.
and it's interesting you mentioned Greece because the headline I saw over the weekend was is France's 2024, Greece's 2010. And speaking of acronyms, BRICS are back in the spotlight
Oh
this
yes.
morning. So tell us a little bit about what's going on and why we're seeing the U.S. dollar get a boost on the heels of President-elect Trump's comments on social media.
So, it's BRICS countries: Brazil, Russia, India, China, and am I missing somebody? But they've added a few other countries as well, and many of them are sort of aligned with each other. Although India is probably trying to stay neutral, trying to be friendly to everybody, to both sides. But certainly, certainly Brazil with Lula and Russia and China are all sort of anti-Western, anti-American for sure, and because of what we did with Russia, freezing their assets in U.S. banks, about $300 billion in U.S. dollars, I should say, $300 billion worth. There's been a move of trying to have trade not denominated in dollars, so trade in rubles, trade in renminbi. It's taken on to some extent, but Trump decided he wanted to say something about it and say, if you try to price things other than dollars, I'll throw 100% tariffs on you. So we want you to keep using the dollar. Um, Probably a kind of an empty threat, but nevertheless, it's somebody who's paying a lot of attention to that.
Sure.
And even though he wants lower rates, it means a lower dollar, but he also actually wants a stronger dollar. But that's kind of Donald Trump for you. But it's sort of, I guess, a view that you don't get away, you won't get away with some of the stuff that you think you might get away with, for whatever that's worth. But I think for most of the world, unless you're buying things from China, you do want your reserves in a currency that's going to be pretty stable, where the rules for business and government are generally free, but you can move your money in and out all the time. Try doing that in Russia or in China. To be perfectly direct. So I don't think the U.S. dollar is in any significant danger for probably quite a few decades to come. Hopefully those won't be famous last words someday. You did mention something about earlier when we were looking at the markets, Intel. It's up ostensibly because CEO Pat Gelsinger has retired early. He was supposed to retire in 2026, and he retired early. They didn't agree on, I guess he and the board didn't agree on strategy, and it's a little tough when you resign and the stock rallies in your face. So I suppose you try not to have that happen, right? You want the stock to drop when you leave. Well, I'm sure it will happen to J.P. Morgan when Jamie Dimon leaves.
Yeah, that is a stock we'll continue to keep on watching today, and that's another reason why the Nasdaq is higher today and hitting new record highs. But as we continue the trek around the globe, so we talked about what's moving the FX markets, and we talked about tariffs, and you mentioned the reason why we're seeing the U.S. currency higher and Trump's post regarding the BRICS nations. But as we continue our trek around the globe, let's take a look at Australia, the land down under, and then later on today we'll go to Norway, the land of the Vikings, and talk about what's going on there. But Australia is banning social media for those who are under the age of 16. So that is something very interesting. So what do you think of that?
So that's caught my attention late last week because it's a pretty big move. They said essentially Snapchat and what were they looking for? Snapchat and X and TikTok and all these other things, with basically the exception of Facebook, with the exception of YouTube, are banned for users under 16. And here's the reason why. I'll read the thing from from one of their ministers. He said, over the period from 2007 to 2010 to 2019, 2022, the mental well-being of young Australians became worse, much worse. the share of young people reporting a mental disorder rose by 40% for males and 60% for females. Self-harm hospitalizations rose 15% for males and 43% for females. And finally, suicide deaths rose 23% for males and a whopping 70% for females. So the Australian people supported this ban by 77%, which is tremendous. I mean, you can't get 77% of people to agree on anything unless you're in sort of like the Democratic People's Republic of Korea or something. 77% is virtually impossible. But I think the view there for Australia is this is doing a lot of harm, and even the teenagers said this is really isn't good for us. So the thinking for me is this the beginning of a bigger move? Will other countries follow suit? The libertarian in me is a little disturbed. I really don't think the government ought to be telling anyone to do or not do something. But certainly you could say that social media in general, except perhaps for news, and we're on YouTube, so we won't be blocked.
Absolutely.
I'm happy. Maybe we'll get a little more viewership out of it. Is that libertarian in me says I don't like to do that, but it may be a better thing and better for health for the kids to not be looking at social media all the time. Will that the U.S. won't do it, but will it give new oomph to the banning of TikTok, which is in the courts where Trump has sort of been on both sides of the line on? Will Europe start to do that? Because Europe has sort of, I think, somewhat, maybe not draconian, but they have somewhat status habits. They like to ban things. They like to say you can't do this, you can't say that. You can't offend anybody. So is this the beginning of something else? I mean, or maybe it's just limited to Australia. Australia is sort of maybe a little more homogeneous polity than other places. I mean, they famously banned guns basically throughout the entire country after a pretty terrible shooting in the aughts, somewhere in the middle of the aughts. So it's interesting to keep an eye out. For potential impacts from this. Now, it's not going into effect for a year, and the penalties will be placed on the companies and not the user. So I suspect it's going to be hard to enforce, but nevertheless an interesting first step by a pretty important country.
And Tai, I think you mentioned some very staggering statistics when it comes to mental health of youth when they're engaging with social media. And just playing devil's advocate, when we think about substances like tobacco or even cannabis or alcohol, there are age limits for that. And I think in this post-pandemic era, there is much awareness when it comes to mental health. So it'll be interesting to see how other nations, as you mentioned, follow suit with this.
That's right. Europe. I look at Europe. I look at Canada. I look at places like Singapore, where are they going to say this is a pretty good idea? It may well be. I mean, I'm kind of two minds of the TikTok. I'm not on it. I just not that interested. But I'm not really sure, and if it really adds much to the body politic, and certainly to the teenagers who are in this country. The time might be better spent on other things. Like watching us.
So I'm guessing that you're not on TikTok creating content or dancing.
People would pay me not to dance or sing.
Well, continuing our trek around the globe, before we get to Norway, let's talk about seasonality. So this is the time of year when we start reflecting on what happened during the year and start looking ahead to trends that we'll be watching. But before that, there's something called the Santa Claus Rally. So for the viewing audience who may not be as familiar with how this actually works in terms of trading days and the implications of it, can you inform our viewers here?
Sure. So people in the financial markets look at a lot of indicators. Look at fundamentals, they look at technicals, they look at exogenous events, and then there's seasonality. And seasonality, essentially, and we'll have a chart up in a second. Actually, if you could bring up graphic one, and we'll leave it on the screen while I talk a little bit about seasonality before we go into seasonality for stocks. So seasonality is what I like to call a third order effect. You wouldn't necessarily make a trade based on seasonality alone. You want to see where fundamentals are, where technicals are, but there is a pattern to seasonality for certain for stocks, for certain commodities. So let's look at the S&P 500. Now, I got this off barchart.com. Great website. Normally I used to get this off Bloomberg, and it would cost me a fortune to have a Bloomberg terminal. But this is free, so go take a look at barchart.com. So this shows the monthly returns of the S&P 500 over the last 10 years. I would note that I put a note here. It was actually a 15-year chart, but if I put a 15-year chart on here, you can't see it. It's so small. So those averages are actually 15-year averages, but I only showed the last 10 years. So if you look at November, November historically has been a great year for stocks. It's only been down 1 year out of the last 10, and on average, November over the last 15 years is up 3% on the month. December, which we're starting today, is also generally on average positive, a little less than 1%, and you can see over the last 9 years, 6 out of the 9 years were positive, and actually most recently, with the exception of 2022, when I think we had a little bit of a disaster in late December, generally very strongly positive as well. So uncertain where we're going to see it, but likely to be less strong than November, but probably a decent month. And what's important is that we can look at August and September. August and September seem to be the riskiest months, particularly September, if you look at all the pinks. And then January is also a little bit more mixed. Now, again, I wouldn't necessarily base where I put my ETFs on this seasonality, but it's certainly helpful. So I would like to think that December is probably going to be an okay-ish month. Let's move to another commodity. Let's look at graphic number 2. And this is gold. Gold is interesting because there's some months that are quite strong, some months that are quite weak, and a lot of it depends on the holidays in India and the holidays in China, where people really like gold. The Indians, this is their store of value. The average Indian woman probably knows more about gold trading and gold prices than the average gold trader in the United States, and I'm only half joking. But if you look at November, November's been sort of a meh month for gold. It was going to be a pretty good month. I know we had that huge Besant-related drawdown. So generally, November has not been a good month. December is a better month, as you can see the greens. And then we go all the way to the left of the chart. January tends to be a superb month because you're ahead of the Lunar New Year, and the Chinese are all buying gold for ahead of the Lunar New Year for gifts. So gold is significant in that you really see patterns. Like September, it's a terrible month for gold. Sometimes we don't know exactly why. I mean, this year was so great, but look at September is almost always negative for gold. Something to bear in mind. Let's look at graphic number 3. And this is Bitcoin. So Bitcoin is a strange animal, and you're probably looking at how much it rallies rather than if it rallies or not. And there's a lot of big fluctuations in there. But November, historically, generally a pretty solid month for Bitcoin. December as well, though not nearly to the same extent. Over a 15-year period, November rallies have been an average of 38%, and December rallies only about 10.5%. And then you're generally similar to January. So Bitcoin, by the way, we were laughing last time I said, well, it could hit 100,000 before we finished the show, and it just missed. It traded all the way back down to I think nearly 90,000, and we're back up again. So I do hope it hits. So I don't, that doesn't become famous last words. It doesn't hit 100,000 for 2 years because some silly fool on YouTube said that it was about to hit at any minute. And then I think we have one more chart, graphic number 4. I believe I recall correctly. This is the U.S. dollar. So this is also interesting. December, generally quite poor for the U.S. dollar over the past 15 years, down 0.8% for the month, and 8 out of the last 9 years, Decembers have always been poor for the dollar. So that's a seasonality trend that you ought to pay attention to. So if the dollar is very strong right now, maybe this is a chance to take advantage on $8 longs or put in a speculative dollar long if you wanted, if you wanted to do it. I'm sorry, a speculative dollar short if you wanted to do it against the euro, which is at its weakest point right now. So if you wanted to be long euro dollars, this seasonality suggests that in December it might be a good short-term bet. And this is not an investment. This is really a 1 or 2 or 3 week trade. You can see certainly that there are months. May tends to be quite good for the dollar, as well as months like February and September. And I think I might bring these charts back at the beginning of of the months just to give us an idea of where things have been. But it's like, again, you never generally make an investment decision based on it, but you should be thinking about it.
Yeah, I think it's really helpful to see how each of these have performed over the course of the different months over the different years as well, because when we take a step back and look at the performance of the S&P 500, gold, Bitcoin, as well as the U.S. currency this year, we know that we've seen gains, but to see how it performs on a monthly basis over the years, I think it's really helpful. And you did bring up Bitcoin and how we saw it within a stone's throw of 100,000, yes, but not quite. And right now we're right below the 97,000 level, but we might perhaps get closer to that level once again. And it's quite staggering to look at the year-to-date gains of Bitcoin up over 100% this year. So as we head into the close for today's session, why don't we end our journey with Norway, the land of the Vikings, and what we've been seeing with EV sales in Norway. When we think about Norway, we know they're a major energy producer. They themselves rely on hydroelectricity. But in terms of EV sales, what's going on in the country?
So it showed up in October that 94% of the automobiles sold in Norway were electric. Now, that is just the sales during the month, and there are plenty of internal combustion cars, both gasoline and diesel in Norway, and will still be that way for some time. But essentially, this is a relatively small country it's a big country, yes, long distances to drive. And it was interesting that they were able to say, we want to actually go away, become fully electric. And as a matter of fact, I think their sovereign wealth fund, which is close to $2 trillion, because of their oil, actually does not invest in sort of carbon producing assets. They want to, and Norway's, I think it's, God's country. It is the most beautiful, the fjords of Norway. I honeymooned there. Some of the most beautiful places in the world. And sort of untouched, and I think the Norwegians feel like there is something to beauty, and we want to keep it as as nice and as beautiful as it has been for many centuries. So I think that's part of the thinking behind it. But the fact that they were able to plan and put enough charging stations in places where in such a big country they could have that many electric vehicles, and there's so much uptake of electric vehicles is interesting. Now, I could see that in sort of other European countries. It'll be a long time before we get to it here, because sort of Americans are stubborn and we're always in a hurry. If you'd say, Tai, you've got to go park your electric vehicle for 40 minutes while in the middle of a drive, what am I going to do for 40 minutes? Now, there's probably some opportunity here where you put in charging stations and really nice stops where you can sit down and eat and do whatever you want, do a little shopping. There's probably, for some entrepreneur, or they've probably all done it, you can make refueling or gas stations much more interesting. So if you go to a place like Texas, there's Buc-ee's. Now, my kids love Buc-ee's. You can go in there, put gas in your car, but you do a whole bunch of shopping. And you can do it in Texas because there's so much land out there. They said like the $1.29 huge ices and all the really great food and the shopping. So maybe there's more of that in the American future, in particular if we want people to sit around and charge their cars for 40 minutes before you're ready to go.
Okay, Tai, well, thank you so much for joining me as we kick off a new trading week. We'll be back on Wednesday, so I look forward to speaking with you then.
Great to be here. Thank you.
Thank you, Tai. And that will do it for Global Money Talk live from the New York Stock Exchange. We're so excited to bring you daily coverage here on SAPRO TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us. We'll be back here tomorrow. Have a great day.